You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it's time for the funkiest show on the network. We get out into the weeds and the wilds, and sometimes some very funky products. You never know what we're going to break down every week on TWIFO, This Week in Futures Options. My name is Mark Longo, welcoming you to this final TWIFO of 2017. It's the last time I'm going to hear that funky music for this year, but don't worry, we'll be back sooner than you could think, pretty much next week, for more shows in the big, great, crazy year that will be 2018. And, of course, you guys can always join us live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, via the old Mixlers. Enjoy live stream. If you got a question or a comment, hit us up there. We tend to give the live guys a little bit of pride of place, even though we get a bunch of shall we say, after the fact questions on the podcast as well. So no shortage of questions, but if you got something live burning in your brain, you want to hit us up, go ahead, hit the chat. That's probably the easiest way to do it. Twitter also works, and stock twits and all that fun stuff. Facebook, if you're so inclined, you want to take a break from sharing the baby photos to ask an options question. We get some over there as well. And of course, you can always listen after the fact via the app or via iTunes, wherever you get your favorite podcasts we should be there. And of course, again, remember, you hit us up. That is the way. We got a sense for what you guys want us to talk about. But today is pretty easy. We kind of know what you guys want us to talk about, because it's what we want to talk about as well. It's just looking back at what a crazy year it has been. And to help me do just that, my cohort, my partner in crime, the founder of Bantix Technologies, creator of a little platform we like to use around here called Quick Strike, Mr. Nick Howard. Nick, welcome back to TWIFO, sir, as 2017 draws to a close.
Hey there, just doing a sound check. Can you hear me okay? Because I'm on a Bluetooth headset today. So
Bluetooth, are you from an undisclosed location again?
I'm from an undisclosed room in my house, since I just was trying to beat the weather and just stick around here today.
Well, there you go. You sound all right for us, so I think we can get the ball rolling. Mr. Nick, we got a lot to talk about here, looking back at the year that was. But of course, before we do that, there was some stuff happening this week, so I'm sure our listeners will probably maybe want us to start there. What are you feeling in your bones, Mr. Nick? I got a feeling you're probably going to say crude, but is that where you want to start?
Well, I think we could probably go with our standard practice of crude and gold, and then probably, I'm sure, we're getting a lot of Bitcoin people making comments or following or retweeting us. So I think we're going to have to always take care of them in the near term, at least, while the craze is at fever pitch.
Yeah, definitely seems like Bitcoin is starting to suck up all the oxygen in the room. I got a feeling it's going to be a big trend in 2018, but we'll get to looking ahead in a little bit. Let's start with the week that was, which was actually a pretty active week. Some of our other shows, we were kind of fighting for things to talk about. Not a lot really going on in terms of action this week. But out there in the commodity space, there was some action, probably most notably for a lot of you. Good old crude finishing up the week here north of the 60 handle. A lot of you have been waiting for a nice close at that level, finally getting it 60.5, finishing the week up about 2 handles. So for all of you crude bulls who've been waiting for this moment, waiting for a little bit of vol to come back in, you got your wish this week. Again, up 2 handles on the week. And finally, we get to say this, Nick. It's been a while since we've said this. Vol coming back into the crude. So all you guys have been writing in, when should I buy vol? When can we finally hope for a little bit of a pop? Well, Nick and I were kind of saying last week that, it doesn't seem like they could squeeze that much more out of this in the near term. And you're starting to get enough underlying movement to, as Nick likes to say, pay the rent. We definitely paid the rent this week. So if you listened to the show last week, then maybe you got in on some hot WTI action. All this movement, man, it was a pretty decent week for WTI options, all things considered, up a little over about 4.3% in terms of OI this week. So a little bit of additive action out here. And if you're looking at where the number one with a bullet was this past week, you got to go out to Feb. Looks like Feb is where the number one with a bullet was. It was pretty close. It was a tight race between Feb and March, but Feb pulled it out in the end. And it was the Feb double, the Feb 55 puts, that led the charge this week. Just 10 contracts shy of 9,000 out there in the old Feb double puts. About a third coming on Tuesday, a third coming on Wednesday. Again, no action on Monday this week, listeners. The market's closed for the Christmas holiday. So a truncated week, but still an action week. That's why the total volume numbers maybe aren't as high as we usually talk about here in WTI, because we're missing a whole trading day. But a pretty active one nonetheless. Again, about a third on Tuesday, a third on Wednesday, and the rest kind of scattered throughout the week. Total just 10 shy of 9,000 contracts. Then keeping it on the put tip, we got to roll on out to March. The March 57 puts doing about 8,500 contracts. So hot on its heels. That one doing about 3,200 on Wednesday, 2,700 on Thursday. The rest kind of scattered throughout the week. Again, net opening on this one, about nearly 5,000 contracts net opening here. So a pretty active and a pretty aggressive opening time in the March 57 puts. Worth noting the double puts I talked about earlier in Feb. Pretty much unched from an OI perspective. So they were just pretty much trading back and forth all week out there. Then we dropped down 57 puts in the front month in the Feb. We're also active with about 8,000 and change going up the lion's share on actually today. 3,100 going up today, 2,200 on Tuesday, and net slightly opening about 700 contracts on the week. So a lot of back and forth on the double, 57 puts in WTI this week, and some opening action on the March 57 puts. And then we go a little bit farther out. Let's see if there's what kind of call action for all you crude bulls. You think this week would have been dominated by the calls, but so far at least it's been all puts all the time. The first call we got on our list comes down a little bit. It's the Feb 60s doing about 7,600 contracts. So the lion's share actually coming on Tuesday with about 3,700 coming then. And again, this is slightly closing, about 500 or so closing on the 60 calls. You think so? Not surprising you see a lot of back and forth action on the 60 strike. We thought maybe you'd see some people flocking into that strike once we broke through it and sustained it. Didn't seem to be the case, at least here in the Feb contracts. Let's go out a little bit again back to March and see if that is a similar narrative. Again, by the way, listeners, you guys can follow along while you're listening to the show, either live or after the fact, with the reports yourself. Generate all that cool stuff for free. CMEgroup.com/TWIFO, TWIFO. Type that into your browser right now while you're listening, and you'll get to see all this cool stuff exactly as Nick and I are seeing it. If you're listening after the fact on the podcast, make sure you just go in and change the expiration, the settings there, so you get the previous week, not exactly to the date where you're watching it, because obviously those numbers would be different. And again, the 57 puts was followed hot on their heels in March by the 59 puts, doing about 8,000 and change as well. So this was pretty much all put action this week, which is kind of surprising out here, given that the narrative, the broad drumbeat in most of the financial markets was, look at these new record highs for crude settling above the 60 handle. What a huge week it is for crude bulls. It was puts that were leading the chart. 59 puts out in March, doing 8,000 and change, 6,500 of that coming on Tuesday. So Tuesday was all the action out there, and about 6,200 of that was opening on the week. So a lot of opening action in March. Again, probably wasn't a lot of OI sitting there in March to begin with anyway, so maybe part of the reason why the OI numbers are a little bit skewed out there. And going a little bit farther out, as we are wont to do, out to June. There was some June call action that caught our eye. It was the June 60s, doing about 6,900 of those. The lion's share again today, 3,000 and change, so a little less than half coming in today's action. Net actually closing on the week, about 1,500 contracts closing there. So a lot of closing or back and forth action on the 60 strike, which is a little bit surprising. I think maybe you'd see a little bit more people piling in to that strike now that it's gotten so much ink, so much attention that things are actually trading out there. And again, longer term put players not to be forgotten this week as well. The 42 puts out there in Dees also doing a lot of paper, doing about 5,200 contracts, pretty much evenly split between Monday and Tuesday. No volume today, scarcely any volume on Thursday. It was about 2,500 on both of those days, a little bit more on Wednesday for these 42 puts. About 4,400 of that was opening. So a lot of opening action here on these 42 puts. So again, puts seem to be dominating the narrative, which is a little bit surprising. If you want to go a little bit farther out, we did see some action on the June 2019 as well. The June 2019 60 calls with about 2,000 and change, about half of that opening. So there was some opening action on the 60 strike. You got to go all the way out to June 2019 to really find it. I don't know, Mr. Nick, that's a little surprising to me. Is that as surprising to you out there that it was pretty much all puts all the time this week in WTI? And then what else caught your eye out there from a quick skew perspective, sir?
Yeah, I switched headphones here, so hopefully you can hear me a little bit better. I connected to my device as opposed to
you sound good, sir.
Well, first off, does it surprise me that it's mostly puts? I don't know that is the case, given that the crude market pushed higher because of the Libyan pipeline explosion, right? So that's really the news from earlier in the week. I think the day after the 26th, that's where we saw the push a little bit higher, and vol was immediately higher that day, but it's off for the week. So I don't, and I think they had mentioned when I first read about this that it would take a couple weeks to get that, back in order. So I don't foresee, at least based on the fact that nothing fundamentally has changed. I don't think any big numbers came out with the EAI report a day or so ago. So, am I surprised? Not necessarily. I would think that we're likely going to maybe see a retracement here. Yeah, we got through that 60 handle, but I don't think there's anything that's going to keep pushing it that much higher unless there is more issues of where there's some supply interruptions or anything like that. So yeah, puts trading. I think people are looking at it. Again, remember, Mark, I think this is also part of the deal is, the event happened on the 26th. That's the day after Christmas. Some people aren't around, so it's a little bit thinner market in terms of people reacting to that news. Also, it's Boxing Day in the UK, so if there's any trade happening out there, there's less people around as well. So I would think that come it's not Monday because it's off again, but come Tuesday or when trading starts again on Globex, that we might not see that those highs sustained for very long, and maybe that's what people are doing is they're thinking the same thing, therefore they're getting in on the puts with that trade. So that would be my first thought, because nothing really changed significantly. And then as far as the skew goes, I mean, what's interesting from on that end is, we did see some changes or some tilting of the curve. So across the board, I think we're seeing the puts be a little less expensive and the calls being a little less cheap. So on the 20-day option, which is the Feb, we saw the calls go in positive territory to the at-the-money for the first time in a while. And then also March, April, May, June, July, August, all the way out through December, we saw a definite increase in call value from a quick skew standpoint. So, kind of a natural reaction to the fact that we got through that 60 strike. Again, it's all going to be a function of whether that upside move continues. Again, knowing nothing other than what I observe looking at the futures and the news, I would think that we probably aren't going to see that continued move higher. And I think vol will come in as it already has this week once there are more people around and the market has absorbed the fact that the blast doesn't really do much in terms of interrupting the supply or tightening tightening it from that standpoint, making the price go higher.
Yeah, let's move on to our other product of the week that still had some action, a little bit of upside action, kind of the double narrative this week in the two big products everybody likes to watch outside of the old coin, which is moving and shaking left and right and center, is, of course, the shiny stuff, gold, the original nice little coin you could hold in your hands before we had all these cool virtual coins floating around out there. And gold, the gold bug's happy, ending up the week up about 35 handles, breaking north of that 1,300 level. A lot of people have been watching for quite some time. So about 2 3/4% upswing on the week. Nothing to sneeze at. If you're a gold bug, the options were decent, not rock'em sock'em this week. Again, we had a truncated week, so OI only up just about a little bit shy of 3% on the week. Vol, kind of a mixed bag, up a bit in the near term, coming off slightly in the longer term. But again, the gold vol story hasn't something we've been talking about for a while, kind of hand in hand with the crude story, saying, this vol is at or near the lows of the 5-year volatility cones. At a certain point, you got to at the very least stop selling it. Whether you buy it or not is up to you, but it's getting to the point where it's cheap enough and the underlying is doing enough that it probably could pay the rent, and this is a week when it certainly seems to have done just that. Moving on out to what was lighting it up out here, number one with the bullet coming up in Feb. It was the Feb 12.5 puts that were lighting up the charts this week. Again, another interesting choice given the fact that we finally broke through the 1,300 handle. We got the 12.5 puts lighting it up here in Feb. So some interesting choices here on the board to close out the year. That's kind of been the narrative for TWIFO. You never know what's going to come at you. And of that 48, nearly 5,000 contracts going up here this week, a little over half coming on Thursday, 2,600, and the rest kind of spread out throughout the week. About 500 of that opening, so a little bit of opening action actually on the 12.5 puts. Also a little bit maybe interesting or surprising given the fact that most of the narrative in gold this week was on the upside. Looking then, we dropped to number 2. We've got some call action, so maybe the one you thought would be leading the charts is instead in the number 2 position, the 1,300 calls in Feb, doing about 3,300 contracts, a little more than half coming on Wednesday, about 1,700 and change. The rest, again, broken up throughout the week. About 800 of that opening, so a decent amount of open paper there on the 1,300 strike, which you probably would expect. I mean, we probably thought we would see in crude, given the fact that it broke the 60 handle, but we didn't see. We are seeing a little bit of that in gold with about 800 or so about a quarter of that paper actually opening on the week. Then we drop down again, more put action, the 1280 puts, all in Feb. Feb kind of dominating the charts, nearly 60% of the paper this week going up in that Feb cycle. So all the love was out there in Feb. 3,200, nearly 3,300 of these 1280 puts, about 2,000 again coming on Thursday, so the lion's share going there. So this one kind of net back and forth, only about 300 contracts opening on the week, so a little bit of churning and burning on these 1280 puts. And we drop down again, all puts all the time, yet again, 1275 puts in the number 4 spot here, with about 2,800 of those going up. The lion's share on Wednesday, about 1,000 and change, about 700 and change opening on the week. So a little bit of opening paper again on the puts. So a little bit maybe surprising narratives playing out here in the old gold and indeed on the old crude options. Let's go out a little bit here and see if we see any other kind of funky paper catching our eye. Again, you guys can play along, cmegroup.com/TWIFO. The 13.5 calls in March, fairly active for all you looking on the call side, saying, hey, what's up with the gold bugs? 13.5 calls, doing about 1,600 contracts, actually pretty much unched on an OI perspective, so back and forth on that strike as well. Wasn't like someone was really piling into the 13.5s and saying, here we go, a rally ho mode. We go a little farther out. We saw nearly 1,000 of the April 1,400 calls lighting it up this week. And then farther way down the charts, we got a couple of hundred of the 1,600 calls in Jan of 2019. So you gotta go pretty far out, listeners, to get some craziness. And if you want, looks like the most crazy town paper of the week here, go all the way out to D's 2019. Someone picking up a 20 lot of the 10.5 puts, Mr. Nick. You can tell us. Nick, was that you picking up a 20 lot of the 10.5 puts in gold this week, sir?
I might have sold them. But I wasn't going to buy them.
Pretty rich bids on those, I'm sure.
Yeah, no, nothing. I don't. I'd be surprised to see it down there. But then again, somebody's probably financing some stuff with some sale of some downside puts. You never know.
So aside from those silly puts, what else caught your eye out here in gold this week? A little bit of vol action, a little bit of skew action. What was lighting it up for you for gold this week?
Well, again, we talk about it all the time. We had been on sort of trending around the bottom for a while here over the last few weeks, and like I always say, when you get a low vol and you're down to the bottom of the range, you start to think about wanting to do something that's it's not a vol trade, but it's a gamma related trade. So catching my eye is just the rally, and now for me, it's going to be whether the same thing with the same thing that we mentioned with the crude. Was this a rally because it was a thin market participant, even though we had some trade and we had some increases in OI in general, that type of thing, or is this going to be something where people come in and sort of tamp it down again and push us down into the lower regions of the of our range? But we didn't get much of an increase in vol with this move up, which you would sort of expect because it was a very gradual sort of day-to-day move higher, not a sharp move higher, which is typically where you'd see that vol jump. But we did see the puts sort of, they got a little, the puts got a little, went from being above the at the money to below the at the money. So there's a little bit of a change there. That could be the fact that, we sort of slid up the volatility curve. But we also saw the calls get a little bit more bid in the first 3 contracts. So, and not just a little bit more, but just, significantly more from an absolute percent standpoint, but not a great deal from an absolute volatility percent standpoint. So, again, I have the same sort of comments here. It's I don't know if this has anything to do with the fact that although we had pretty good ranges in the Bitcoin, that the gold, sort of came back a little bit into fashion as people saw that the Bitcoin kind of stabilized from a price standpoint, because I don't think there was anything in particular, at least I didn't hear anything this week, which talked to why we saw this sort of move higher, especially in this last week of the year. Now, it could be that people were sort of looking to do some portfolio balancing or trying to, get something a little bit more stable, switching of assets, that type of thing. But, just kind of a bid in the calls in the first couple months, and then, and just really waiting to see what happens from a follow-through standpoint more than anything else.
Speaking of following through, let's follow through on just what a crazy year it was. And we talked about on some of our shows this week, Nick, about it's hard to come up with sufficient narratives to describe this year in the markets. One of the ones I hit on earlier this week was a lot of smoke but no fire in terms of broad market. We had a lot of events you think would shake things up, yet never really did. We never saw broad equity volatility really return throughout all of 2017. We had a new administration come in at the beginning of the year. Everyone thought that would inject a lot more volatility into the equities and into the index market. Did not materialize at all. In fact, it was the opposite. We're talking about historic year closes and settles for VIX and just low levels that people in broad equity volatility haven't seen in ages. We've also yet, in spite of that, we've seen surprising resilience in terms of overall options volume this year. It's been strong on all sides of the fence, on the futures options, on the equity options, index options. Everywhere you look, volume is fairly robust. I mean, there are pockets that are stronger than others, obviously, and some products that are lagging. But overall, it's been, I think if you had told anyone coming into this year that we would see what we saw, which was a broad rally in the indices and just decimation of volatility, everyone would assume, okay, options volume going to take a hit across the board. And yet that pretty much isn't what we saw. Was that as kind of maybe surprising to you, Nick, as it was to me this year, that the options market stayed fairly resilient throughout a lot of external pressures that you think would have caused a lot of problems?
Yeah, I mean, I think that there was a lot of expectation coming into this to the first year of the new presidency and that type of thing, and maybe we still got the trade because there always has been the expectation that the other shoe was going to drop. Either in, whether it be the investigation or the rhetoric or sort of the tensions between us and other places on the globe. So for us to stick around and, like we mentioned, for the vol levels to get beat up pretty good, but for the option volume really not to, and the open interest to not see much of a decline. Now, I'm sure that there's year-over-year stuff that's, I don't know specifically to see me. We could probably have them on in January, get somebody over there to talk to the year-over-year stuff to get a little bit better idea. But, just from our own observation, watching the open interest increase week over week in all of the, benchmarks for the most part, I think that as much as there's not volatility, there's still trade, because I think there's always that expectation that something's going to happen or something's going to be said to sort of push us out of a little bit of a volatility malaise that we had. But like we always mention, because of the way that the futures have been trading and the ranginess of them, there still has been opportunity available. So if we made it, I always look at it from a standpoint of, if you make it through sort of these trending sideways years, inevitably you're going to get to the point where you get those pushes up or those slogs down. So I'm sure people are waiting. I think you're going to see some activity right in the beginning of January, just given, I think, that people took sort of the last couple of weeks off, see what happened with the, we've seen now what happened with the new release of the Bitcoin, how that's going to affect things. And I think we're going to see some activity in January, to be honest.
Yeah, well, I think that's certainly something I think we would all look forward to. We'll get to our, I think, prognostications in a little bit. But I think one of the other big stories, obviously, that was dominating our show and the futures options headlines in the markets this year was kind of a little bit of a, the breakout that wasn't out there in WTI to the upside or the downside until these last couple of weeks. We were talking about how range-bound crude has pretty much been for the entire year, pretty much since that big OPEC meeting of November of 2016, when it really kind of set crude north launched it into a new volatility paradigm, a new skew regime, and it kind of made it range bound in that level from the low 40s. And Matt had picked on the show earlier this year, I picked a good top of around 52, and that held for quite some time. And we had that nice, 42 to 52 kind of range, or even mid 40s to 52 range for quite some time in crude. And we saw the vol react accordingly. It kind of just came in, and everyone was waiting for that moment where we would finally surge to the north. We saw a slow upside move, and then finally, in the last couple of weeks, kind of breaking through that 60 handle. People have been waiting over a year to hit. It is kind of course, the open question whether or not we can, maintain this, or if we go into Jan and it's just right back down to the 50 handle again. But also the other narrative going along with that, Nick, something we talked about a lot here, has of course been just the endless frustration of people out there who've been buying premium. Not all months have been bad. There have been some times when you have been able to quote unquote pay the rent, as you like to say, because the underlying has been delivering, but the vol just continues to get squeezed out there, and it's been a frustrating thing. I know for a lot of people who were even coming into the year saying, man, crude vol is so low, I should buy some of this, and you weren't necessarily rewarded for that all the time, even if you did pick your opportune moments out there. So it's been a kind of probably a frustrating year for a lot of crude traders, but if you can get in and trade that range pretty aggressively, then maybe it's been a decent year. I don't know. What are your thoughts on looking back on the year for crude, Nick, and what really resonated for you?
Well, I'm looking at the futures chart now, and I'm sure everybody has taken a look at it over the last few weeks. We definitely were very much range bound, but I think we're still sort of range bound when we look at it even further in time, right? So we traded around 55 beginning of the year, and then we hit that again, just prior. I think we got up there just at the beginning of November. And then that's when we had the little bit of push high. And we, each of those little pushes higher, we got a little bit of a kick and ball, and then we came back off again. And I still think that, all in all, we're pretty tight from I don't see us breaking out of this range. And even though we probably averaged around, if we drew a line through the average here, we'd probably be around 50. In terms of what our average price is for the year, maybe a little bit, around 50, maybe a little bit higher. But, like I said earlier, I think that if nothing had happened this week in terms of news to affect the market, I don't think we would have necessarily been, we would have been having this conversation about the 60 handle. We'll be talking about how we are just kind of stuck in the doldrums of the 50s. I mean, we had breaks down earlier in the year. In July, we broke down into the mid 40s. We never saw that again for the rest of the year, and then we kind of hung around, and each of these little pushes up has done something to volatility. But until we get through the 60, we got to the 60, we got to and through, but we really didn't break through, right? So I think some of that becomes defense of that strike as people are trying to hedge around it potentially with the possibility that it might continue. Excuse me, but yeah, I still think it's a wait and see. But my expectation would be that there's not much movement outside of this range, at least for the first quarter of the year.
Yeah, it does seem like we are maybe settling into a new range, and crude hasn't, last couple of weeks aside, hasn't been known to really make big moves outside of some crazy external factors. So we shall see if that continues. If you guys have your own thoughts on crude and what was going on there this year from a vol perspective, underlying perspective, options perspective, whatever floats your boat. Maybe you were actively trading it out there. Maybe you were waiting and watching and seeing and learning, as a lot of people were doing out there this year as well. Hit us up. Let us know. Gold, obviously another one that you guys like us to talk about pretty much every week. You hit us up about gold. And it's been another one, kind of maybe a little bit of a similar narrative for gold here, Nick, where vol kind of bottoming out throughout the year and kind of just sitting there, hitting the lows on the volatility cones, no matter where you look. So not exactly a premium seller's market, but if you were a buyer, you had to be diligent and really scalp your gamma aggressively to really make it pay off sometimes. This week it worked out, so it worked out pretty well, but it was another challenging one for people on both sides of the fence. Not a lot of juice there to really sell, and to buy, you really need some nice gamma to kick in to make it pay for you, and you didn't always get that out there. So it's been a challenging week for metals. I know Uncle Mike was on the show with you a couple of weeks ago. He was talking this week on one of our other shows just about how, all the precious metals have kind of been a bit of a snooze this year. His 2-year silver collar, he put it on at the beginning of the year. He was hoping to have all this fun stuff that he did with it and talk about it on the shows, and I think he made one trade the entire year on the whole thing. So 1 year down to the 2-year silver collar and nothing really to show for it. So at least it's been an interesting one from a gold and just all metals perspective this year. What really resonated for you on the metal side, sir?
Well, again, sort of the same thing, the range. But I think what was most interesting about the range, it implies that there's movement back and forth. But the fact that we did see this range actually happen, right? It's sometimes you started a low and then you end up at a high, right? And that range really just sort of created itself, meaning we went from this point and we went to that point. So that was that also considered a range. But the thing that I thought was beneficial about this version of the range is the fact that we traded the range, right? You had movement up and down, and sometimes sometimes it made sense from a geopolitical or macroeconomic standpoint, and sometimes it didn't. But we did see that range, so there definitely was opportunities there, and it was pretty well established. So I think that was probably the most interesting part of it, and the fact that we did see some, we saw the vol get hit pretty good throughout the course of the year. But the other thing that was we did see the skew sort of teeter-totter back and forth in terms of what was rich and what was cheap when it comes to the calls and the puts. So we saw that vol curve moving as well. So again, just from the personal viewpoint standpoint, I would think that gold has some more upside, just given the fact that I think people in general are a little bit concerned about the safety of their money and the fact that these cryptocurrencies haven't become what is considered a safe haven yet, or a store of value. So I think that my expectation would be we're going to probably see that bottom part of that range get pushed up a little bit, but we see some trending higher in the gold itself. So that's kind of how I saw it, and I enjoyed watching both of these markets this year just because of the fact that everybody wants the volatility to get jacked or get hammered after it gets jacked up there. But these are where you have to be a little bit creative. These markets that sort of move sideways or move within these bounds, and you have to be creative in order to stay active in the market or to even make money in the market.
I know this is your year of your collars in gold and your hedged futures in gold, Nick. So I know you're still a champion of those trades. At these levels, it's kind of hard to really argue too much with these vol levels, at least. Moving on to some other product categories that did kind of dominate our discussions in previous years. This year, not so much. I mean, across the broad spectrum of FX and the currencies, we didn't see a lot of really breakout events that really drove a lot of interest and a lot of the narrative around the currency space. In recent years, of course, you saw Brexit and other events that really drove a lot of interest. The year before that, of course, we had the big Swiss franc debacle, and it just things that really laser focused a lot of people on currencies who might otherwise not be paying attention to those markets. Outside of crypto, which I don't really count those in the currency realm yet. So let's leave those in their own bucket for the time being. Outside of that, we didn't really see that one precipitating event this year, Nick, that really drove people into currencies. Got a lot of people hitting us up on the show, asking us about it. Every now and then you get a question about, yen dollar or euro dollar or something along those lines. But it didn't seem to be an area that caught a lot of the mind share this year. Did you agree with that as well? Not really the year that currencies were top of mind for at least a lot of our audience?
Yeah, I agree 100% with you on that, just because we saw such interesting trade in particular when it was Brexit and the put skew and the reaction to that and the expectation around what the vote would be, and we didn't see a similar reaction in the FX when the election was occurring. We just talked about Brexit in relation to how anything was possible after Brexit, since nobody thought that was going to happen, and the fact that we had this president elected sort of sort of reinforce the fact that anything could happen. But yeah, nothing really significant, obviously, as you mentioned, and part of that is maybe because of the fact of the negotiations that were going on between the UK and the EU in terms of how that's going to play out, and then just overall, as much as there were some times where maybe some of the political rhetoric wasn't all that positive, it was a pretty stable year from that standpoint. The economies were generally moving along in a positive trend fashion, throughout the world. So, when you have those kind of things happening, there's the steady or expected rate increases on these in the economies that are having good years or a sustained number of good years. So, as expectation sort of it moves forward in a positive fashion, there's not a lot of surprises or not a lot of big event risk like we saw with the Brexit. It's probably a good sign that we didn't have much craziness in the FX space, although we still saw, week over week increased open interest, so people were still trading it, but a lot of it was probably around hedging and less around speculation.
A similar story for the ag space. In previous years, that one has driven a lot of interest for us. People have come in, written in, and we have had guests on talking about fun things. Just in 2016, I know a big story for us in the ags was, the soybeans and how they really set up for a long time. There was a very favorable collar environment. We had a lot of guests on talking about that, and a lot of people were writing in. It drove a lot of discussion for the show, and we didn't see a lot of that in 2017 either. I mean, there were pockets there. I know, Olivewanabroker writing in, making sure we don't forget about the oats bull market. He said that's very important. Yes, there were indeed pockets there, but outside of that, we didn't see the broad that kind of broad event, whether it was a sharp protracted spike in a corn or a wheat or a sell off in another product that really caught a lot of attention, drove a lot of interest, drove a lot of volume from a broad interest perspective in this space in 2017. Again, there were pockets of interest, pockets of excitement that were interesting, but overall, I mean, just judging at your guys' reaction out there and the products you keep hitting us up about week after week, we didn't see ags on that list very often, which is maybe a little bit surprising. Did that surprise you this year, Nick, that ags not really top of mind for a lot of people?
Well, I think when we were talking about it in the early days of the show, we saw the kind of the skew flipping back and forth or really, really wide for an extended period of time, therefore giving people the opportunity to maybe put on a collar or to have some sort of expectation of flipping or switching of the vol curve. And as I look at the quick skew for the past year, we don't see a lot of shifting back and forth in terms of, we saw some sustained period of time there where the 30-day calls were definitely much more bid over the money and the puts were offered. So there was probably some opportunity there in the June, July, August standpoint. But outside of that, we didn't see anything, a really big channel in the quick skew stay out there for an extended period of time like we did when we had the problem in Brazil with the weather and that type of thing in early part of the show, like I mentioned. So again, it's all. I mean, you hear people talk about, right. Somebody mentioned the oats bull market, so that was there, but our focus tends to be it's not so much going to be what the underlying's doing and the fact that there's a rally there, but since we're sort of focused on how does that movement in the underlying or how does that rally affect the options market that we're watching. We can mention oats from an underlying standpoint, but we can't really say much in terms of what happened with volatility or the option market because there's really not much going on there. But I would suspect, like anything else, we'll see. Now that we've had more of a normal pattern this year, we'll have to keep an eye on it and see how it goes as the rest of the winter plays out and see what happens as we move into the new year and start getting into the summer months again. So, we'll have to keep a closer eye on it. I think we got a little bit myopic with our black gold and our regular gold, and we have to force ourselves to get back into the ag space a little bit and maybe make sure that we cover each asset class per show, at least one product per.
Yeah, that certainly is. If we can make people are always writing in this product and that product. Sometimes it's hard to squeeze them all into the show, and sometimes some certain products dominate the mind share. like all things crypto, we got what is this Option God in the chat chiming in saying we missed Nick. We did miss we missed the big futures option story of the year. You know what he says it is, Nick? It's Fluid Milk, our old friend Fluid Milk. Are you buying what he's selling? It was all Fluid Milk, baby. We forgot it this year.
The fluid. I think that I'm gladly forget about the fluid milk, even if there's something good going on there, because because like I said, we are options centric, and fluid milk options. There's not much trade there, so it's hard to want to pay attention to it. But like you just said, I think we have to make an effort to at least do some coverage of the different asset classes, so we are pleasing all of the people some of the time, right?
There you go. There you go.
Just like Lincoln wanted us to do.
So there you go, Mr. Option God, Mr. Nick, pshawing your love of fluid milk. I do think you were joking, though, Mr. Option God. Well, let us know if you were or not. Maybe you are. You're a serious, hardcore fluid milk guy. We never know here. But yeah, it's kind of hard, Nick, to avoid the elephant in the room any longer. The number one, it's kind of hard to lump this in with the commodity stories of the year, but it pretty much is. It's in there. People will debate if it's a currency or what this thing actually is, if it's its own asset class entirely. I tend to lean the latter, that crypto is kind of its own beast. But that said, it's kind of hard to avoid particularly in Q4, late Q3 into Q4 is kind of when, if there was a graph of broad interest of demand for these products, aside from price, obviously, that is where we saw the huge uptick into Q3 and Q4. If you even talked about Bitcoin in the beginning of the year, January, no one wanted to hear it. Even mid-year, May or June, no one really wanted to talk about this. And yet, all of a sudden, in the last 3 to 4 months, it has just enveloped all of the oxygen in the room. Has become the top mindshare thing. Whenever we put out, or CME or anyone else puts out polls for what you guys want us to talk about on this show, it's overwhelmingly crypto, crypto, crypto. It drives out the fluid milks and the oats and everything else just from the sheer volume. So it's got to be the story of the year, and yet it's a controversial one. What is it? What asset are you really representing? Is there really any intrinsic value there? Which of the commodity space really does it represent? There's a lot to say there, but still, it's been a crazy year, however you cut it. Started the year right around $1,000, depending on where you're looking. Obviously, there's different quotes out there in Bitcoin land, but right around $1,000. Got up over 19 times that at one point, over 19,000 at its highs, finishing the year around, I believe, 13. I don't know. Again, you got to check it minute by minute to see exactly where it is, but somewhere around up 13x. So that's not a bad return. I think most people wouldn't sneeze at that, so it's kind of hard to argue with that as just this rise of crypto, Nick, as kind of just the story of the year. Would you agree, sir?
Yeah, and I think we tried to pay service to it early on, but it was one of those stories where I say it all the time. It's like you ask people, hey, if you go back, would you buy it? And to be honest with you, you go back and it's trading 5,000 or 4,000 or 3,000. I don't know that I can stomach buying it at 3,000, 4,000. Even obviously you knew if it was going higher, you would do it, but it was a big nut to carry there, even at those quote unquote lower levels, right? So definitely the story. I think I think we're seeing the futures have tamped down some of the wild rides, even though when you look at it from a percentage standpoint, we're still seeing some pretty good ranges here. But is the story. But I think the new story is going to be not necessarily the Bitcoin, but the coins sort of out on the wings of this. So I think the next step is going to be finding the cryptos that are going to have similar types of percent run-ups over the next year or two. So obviously we'll be talking Bitcoin because we saw the one exchange is going to offer ETFs on both of the different contracts from the SIBO and the CME. And I think, I know that the ETF talk around CME is something that's been happening as well. I don't know if that's related or not, to be honest with you, but, we're going to see ETFs trading, and then people are going to want options. I don't think the options are going to come as quickly as people think. I think we're going to probably see the ETFs first. I know that I looked at the polls, and I didn't agree with the poll result. I voted differently than the winner of the poll result, but it was just, it kind of forced you and I to participate and take place. And I know that I ended up trading some crypto and have been trading some crypto in order to have a conversation and to be a little bit better informed. So from that standpoint, in terms of an introduction to a new market, I think it was definitely dominant and well worth the education to this point.
Yeah, it certainly did force us to really pay attention to a sector that otherwise we probably wouldn't have, and yet it was inescapable, unavoidable. We see firms that delisted Bitcoin products years ago, bringing them back just because of this renewed interest out there. So it really does show what a timing issue launching a new product can be. If you launch it too early, if you're way too early on the Bitcoin train, guess what? No one cared. And now all of a sudden everyone cares. So you got to kind of just catch that wildfire when it's there, and it clearly is there right now for crypto. Speaking of wildfire and just general craziness, Nick, we profiled a lot of weird trades here on TWIFO in 2017. The one that really resonates to me, and Uncle Mike even brought it up again on one of our shows earlier this week, and he borrowed it for his crazy trade of the year. And I was like, no, we got to save that for TWIFO. But it is, of course, it's that big, just the only way you could describe it is really this crazy town gold trade that we saw a few months back. I believe it was early October, of this gold. Remember the time gold, of course, closing this week up over that 1,300 level. But that wasn't enough for one of our friends here who just a few months ago decided he's going to give himself some time. He's going to go out to Dees 2018. So at the time, he had a year and a couple of months. Now he's got pretty much a year left on this trade. He was going to come in and buy the 7,500 of the Dees 2000 call. So already an optimistic play. He needs it to rally another 700 handles over the course of the next year for those calls to start really looking good. He needs it to happen fairly quickly too. He said, I'm gonna curb some of my outlay. I'm not gonna be super crazy, so I'm gonna sell the 2600s because those were rich. And so he effectively has a spread on that looks good if the underlying rallies from 700 handles. And then kicks off again around 1,300 handles or so. So interesting spread. And then if that alone was sizable, 7,500 contracts was a big trade. That was along with sizable and weird enough and far enough out of the money to definitely be on our radar. But what kicked it up a notch and what really put it in my category, maybe Nick has a different vote, but what put it in my list for pretty much crazy trade of the year here on TWIFO was he decided, and again, there was a little bit of debate on what this guy was up to. I think we came down to the fact that he was buying these, but he decided, that's not enough. That's not bullish enough for me. What if it breaks through that spread? What if I'm too pessimistic in my optimistic gold outlook? What if it breaks through 2,700, 28? What if it gets to like 3,000 next year? Man, I'm going to feel stupid if I limited my upside to 2,600. So he comes in, and in a fit of absolute wisdom, we do believe buys, decided to buy 2x of that because 7,500 wasn't enough. He bought 15,000 of the Dees 2018 3,000. I said that correctly. 3,000 strike calls. So let's just walk through that again. 7,500 he bought of the Dees 2018 2,000 2,600 verticals. So in and of itself, that has a very low probability of ever seeing the light of day. And then on top of that, he decided, I may have been a little too hasty in selling those 2,600s. So I'm just going to dial it back up again. If it breaks through 3,000, I'm there. I'm ready. I'm doing it with 2x the size. And so he buys 15,000. I don't know, Nick. I don't know about you, but I didn't see anything else this year, size-wise, just straight up weirdness-wise, that really especially that second leg. That one to me is just really the third leg. Just the kicker on this. I can't wrap my head around why you'd put that vertical on and then add that 2x kicker. It just, I don't know. Is this your crazy trade of the year too, Nick?
Yeah, I mean, it has to be not just for the strikes itself, but just the size of it as well. I don't even know what to say because I don't even know what scenario any of that would come into play, right? I mean, I think things would be really interesting if we got up there, don't you? And I almost don't want to know what's going on in the country if we get to that point. That's for sure.
Yeah, it's one of those trades like when I used to be out in the SPX pit and guys would sell really garbage puts and they would say, oh, those aren't scary because if we get down there, there'll be so many other things going on in the broad economy that no one's going to come after me for these puts. And maybe this guy had a similar thought. I mean, if you get up to that, if those 3,000 strike calls in gold come into play, what else is happening? That's really those. I mean, if those, that's kind of the other side of that coin. That pays off for you, but you may not want to or be able to collect because there's too much other horrible stuff going on in the world that's driving gold to those levels. So yeah, it's a trade that is weird and certainly one I don't want to pay off. No offense to this guy, but I think I'd rather not see gold at those levels anytime soon, just for all the other stuff that implies about what's going on in the broad world. We got a few minutes left. Let's let some of you guys take the reins with your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the final feedback segment here for TWIFO in 2017. Your last chance to chime in on all the big stories of this year and everything else that's on your mind. We kicked it off. We wanted you guys to weigh in on our debate here for the big stories of the year. We asked you guys, hey, pretty simple for our final question of the week here. What is your enduring market memory or event or trend of 2017? We gave you a bunch of choices: the death of broad market vol, the rise of Bitcoin, the unstoppable bull in the broad equity markets, or something else. And chime in with your own thoughts. We already had, I mentioned some of the responses people had sent in. We had the person chiming in with the oats market. That was his big one of the year. We had people chiming in about just the general resurgence of options volume this year, which was interesting. The fact that Trump is a single-digit volatility president, that surprised them. That surprised a lot of people, I think. So a lot of different thoughts. But Mr. Nick, if you had to pick one of those, or maybe you have your own other, would it be the death of vol? Would it be the rise of Bitcoin? Is it the unstoppable bull? What would your choice be if you have one, or maybe you have an other? And then what do you think our audience is voting for?
I would say the most memorable is the death of volatility. And I was saying I don't think of the VIX too often. I just look at the vol in general because, the VIX is according to the equity market, and we're just looking at the asset classes at the CME for the most part. But just surprising given that, a lot of the comments that were made, some of the policy promises that were made, that kind of stuff. I think that I would have expected there to be a little bit more activity from a volatility market. But with that, so to speak, death of volatility, I think it's forced people to sort of, as we mentioned over and over again, kind of look at options a little bit differently, not just think in terms of purely vol, but just think in terms of just price action and that type of thing.
Yeah, it is a crazy one. You guys were kind of mixed on your thoughts here. And coming into the end of the week, it seems like the unstoppable bull has taken the lead. Actually beating out Bitcoin, Nick. So that's surprising. That takes a lot to do these days. 44% saying the unstoppable bull, 33% saying the rise of Bitcoin, 18% saying the death of volatility, and I mentioned a bunch of you, 5% chiming in with a bunch of other ideas there. Let's see, really quickly, we are kind of coming up against it here. You also mentioned earlier, Nick, we asked them last week, when do we think the Bitcoin options will come in? 38% of them said Q1, so they're very optimistic. 33% saying Q2. That's, I think, where you and I settled down, and then the rest coming in kind of scattered throughout the year. Here's a one we could finish up on here, Nick. What are you looking forward to in 2018? I'm assuming this comes from Luke Lookback, ironic handle because they're asking us to look forward. Anything really on the horizon from a futures options TWIFO perspective that's really exciting you? Maybe a resurgence of volatility in some of these products, or something else going on? What are you looking forward to next year?
I think I'm looking forward to the first, big sort of spike. I don't think we're going to see a spike, sort of a dip too much lower. But I think I'm looking forward to the first big spike in volatility and what causes that. And, typically you would think it's going to be with a big stock market break. But that's sort of where I'm focusing on, and sort of maybe we can start discussing where we think that's going to be in the shows for the new year.
Yeah, I think so. I'm right with you. The exact same thing. I'm kind of waiting and I guess looking forward to maybe a bad turn because it could be accompanied by a broad sell-off in the market, which I know a lot of people wouldn't want to see. But that to me is the big question mark, the thing I'm anticipating, looking forward to, dreading, add whatever term you want in there, is when is that worm going to turn and how? That's the other side of the question. How does that happen? Because we saw so many things this year that just did not amount to really anything from a volatility or an underlying perspective. The market just ignored all of them. So we'll see if 2018, I think obviously for the early part of the year, I think we'll be in this same regime, but maybe something will break out. Maybe we'll see a big move in crude from a vol perspective or underlying or gold, or the Bitcoin will continue to deliver, or the markets will something will finally change in the broad equity markets from a vol perspective. Or maybe some of these other segments we haven't really talked about a lot, the ags or the FX, will really spark to life. And that'll be a fascinating thing to look forward to, and I'm really excited about that. I know there's a lot of fun stuff to cover here in 2018 on all things TWIFO. There we go. That would be the right button. What way to end up the year? The wrong music on the show. Adds a little bit of fun. That's the fun about tuning in live, listeners. You get to hear the good stuff. Speaking of tuning in live, Option God following up, say, hey, I was just kidding about the milk. But thanks. I kind of figured you were kidding. He goes on to write, but thanks for putting on a great show all year. Looking forward to 2018. Right back at you to Mr. Option God, to all of you out there listening either live or after the fact. We love you all. We appreciate you all. You literally could not do this without you. Just be Nick and I talking to ourselves. And what fun would that be? We also want to thank all of our guests, a legion of them coming on the show. We'll have more in store for you in 2018. So stay tuned for that. And of course, Mr. Nick, before we wrap up, you guys are always working on cool stuff. Let's look a little bit farther ahead. What exciting big things can we expect from Quick Strike and your team in 2018, sir?
Well, we'll be doing a big release in the next, I think, the first week in January, so January 8th, where you'll see our new calculators, our new on-the-fly spread builders, a new big spread builder tool, and also sort of just a new take on pricing that will make it a little bit easier for everybody to sort of decide what level they want to participate. And as usual, more new free tools that will be available on the CME Group website in the first quarter as well. And let's not forget, we haven't mentioned in a few weeks, continued robust integration with the CME Direct trading platform. So make sure you go out there, and if you're looking for a platform, or if you're willing to have a couple open, I would take a look at that. There's a lot of good Quick Strike stuff available to you just with a click of the mouse.
Yeah, we haven't talked about that in a while, but you're right. It is an interesting. People are always hitting us up. What are good platforms? How should I really access these products? Maybe they come into this for the first time. They spent most of their trading options time on the equity or index or ETF options. They're starting to come over to the dark side of futures options. They want to know how they should go about it. CME Direct, a good place to do that. You get in there, you see the fees all right there in front of you. You can access it, and you got a lot of Nick stuff in there too. A lot of good Quick Strike stuff for you there too to inform your trading. Of course, while you're heading over there, CME Direct, make sure you also stop at bantix.com and check out all the cool stuff that Nick and his team are working on, and sign up for something, because there's a lot of good stuff there under the hood. All this data we talk about here, we just kind of scratch the surface every week. There's a lot more. If you're trading, if you're watching these markets, I honestly don't know how you could do it without this platform. There literally isn't anything else out there. So this is the only game in town for this. So head on over, bantix.com. Kick the tires and light the fires, as they say. And on behalf of Nick and myself and our friends over at CME Group, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. Keep those questions coming. We love hearing from you guys. We'll be back in 2018 to kick off a whole new year of TWIFO starting next week.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.